Dear student, we are going to discuss about the Indian financial environment, its different aspects, about the financial system, what are the components of a financial system, and the nursing home committee report. Now, the first thing is that what is the business environment? Now, what is environment? Now we can say that environment consists of different aspects. The first aspect is the natural environment. Second aspect is the financial environment. Third is the economic environment. Fourth is the political environment and the social environment. Whereas the financial system is the part economic environment. Now the question may arise, what is a system? Generally, a system is a set of interrelated parts working together to achieve a particular goal. Now in case of financial system, we can say that a system is a term in the financial system which is interrelated but interconnected with the different financial institutions, financial markets, financial instruments, agents, and different financial intermediaries which act together to achieve a particular goal. The main goal of each and every thing is that to achieve the economic development of a country. Okay. Now from here we can say that what is financial system? A financial system, a definition is given here that a financial system is a complex, closely connected set of subsystems of financial institutions, markets, instruments, and services which acts as an intermediary between savings surplus units and saving deficit units and facilities. The flow of funds from deficit units to surplus units effectively and efficiently, and thereby mobilizes the scarce resources of the country, which fosters the economic growth of a country. Now from this definition we can see that there are different parts under this definition. The first part is the financial institutions. What are the financial institutions? Under this definition here, the financial institution indicates the banking sectors. The banking sectors may be the commercial banks and the non-commercial banks, or under the commercial banks there may be a public sector banks and private sector banks, and we know that there are so many banks in our country which are fall under the public sector and private sector area. In the public sector area we can say that the State Bank of India, United Bank of India, these are the public sector banks, and under private sector banks, ICICI, Axis Bank, these are the private sector banks. Now the second part is the financial markets. What is the meaning of financial markets under this definition? Here, financial markets indicates the money market, the capital market, and the foreign exchange market. Again, the capital market is divided in two parts. Number one is the equity market and the debt market. And the next part in the definition is that the instruments, that means the financial instruments. What type of financial instrument is used generally in this in our financial system is that the financial instruments are commercial bills, equity shares, preference shares, debentures. These are the financial instruments which are used under the financial system. Under the financial instrument, we can say that there are so many financial instruments which we have already said that the equity shares, preference shares, debentures, government bonds, commercial bills. These are the financial instruments which we are generally used under the financial systems. And the next part is the services. What type of services which are covered under the financial system is that the services may be the services given by the intermediaries. That means the insurance sectors, that may be the banking sectors and other financial institutions. And here the services is divided in two parts. That means the fee-based services and the fund-based services. Here fee-based services are on the basis of commission, brokerage, and on the other hand, fund-based services are bill discounting, mutual fund. These are the fund-based financial services. And the next part in this definition is that the saving surplus units. What is the meaning of saving surplus units here? That means when the consumptions or the expenditures are lower than the incomes or the savings is called the saving surplus. That means when our savings are higher than our expenditure, then it will automatically create the surplus savings units. And savings deficit unit is the when our expenses are higher or the consumptions are higher than the savings, that will depict here as a savings deficit units. And the main function of the financial system or the different financial institutes are to supply of funds from the savings deficit unit to the savings surplus unit effectively and efficiently. Okay, and that is the main goal behind the financial system for the growth of a country or growth of economic development. Now, from this chart, we can say that the financial system generally covers three main parts. That means the savings, next is the finance, and the other is the investment. Already we have discussed here that the savings means the part which is in my hand out of our expenditures, and these savings are generally utilized by the different financial institutions when we deposit our savings to the financial institutions, maybe the banks, maybe the other investment units. And the financial institutions generally apply these savings as a part of their investment, and this will create automatically the capital formation. From this chart we can say that here the savings, finance and investment, from these three areas, these are the main part of the financial system, and from these three areas we can create capital formation, and which will automatically, we can say that it will help in the investment by the different companies, which will automatically the economic growth of the country. And these are the interrelation between the financial systems and the economic development. Next part is the significance or importance of financial system. Why financial system is necessary in our country or in any country? The main importance of significance of financial systems are, the first one is the economic growth and development. We know that savings is the main part of our investment. If we save our some amount of money, then it will automatically creates development, and it will automatically creates our the birth of the investment. Here, economic growth and development depicts here that with the help of the financial system, with the help of different intermediaries, the economic development of a country, the economic growth of a country is possible with the help of efficient financial systems. The next importance is the growth of business and industries. As we know that the savings is the main part of our business of any country for the economic development, and the different business units and the different corporate sectors, they need investment as a part of their savings. Okay, now from the main function of the financial system is to supply of funds from the surplus unit to the savings deficit unit. With the help of this equation, the savings are supplied from the household sector to the industrial sector for the growth of business and the industries. Savings and investment is another part. Here we can say that the saving is the part of the investment which are invested in the business. Next is the national growth. National growth is possible when the economic and industrial growth is possible. With the help of economic and industrial growth, we can automatically say that the national growth of any country is possible. Next is the presence of a stock exchange. We know that the stock exchanges are the part of the financial system of a country. With the help of different types of investment, stock exchanges, they attract the different companies to enlist their shares in the stock exchanges. Next is the price determination. Price determination is that the financial system enables that situation where we can determine the prices with the help of buyers and sellers. Here, next part is the information. With the help of efficient financial system, the efficient financial system also give us the different types of information regarding the investment decisions, whether to invest our money in the business or not. Is that kind of information is provided by the financial system. For example, RBI, Security Exchange Board of India in our country, they provide different types of financial information. Okay, whether we have to invest our money in that stock exchange in any particular company. is the total information is totally controlled by the different regulatory bodies. And the last part is the industrial development. With the help of industrial development, here the financial system also play a key roles in the industrial development of a country. With the help of savings, attraction of the savings, they attract savings, then they increase the savings of the household sector and invest those savings in the industrial development of the country. Now, what is the functions of the financial system? Why financial system is necessary nowadays? The first function is to encourage savings. As we know that the main part of the financial system is the savings. The financial system, the efficient financial system of any country encourages the people to increase their savings. With the help of those savings, the amount of their savings are utilized in case of investment. Not only the encourage of savings, also to mobilize those savings in the different area. For example, the mutual fund, stock exchanges, they also attract people to mobilize, to increase their savings and invest their amount in the different areas. Next is the allocation of funds. Allocation of funds means the financial system also allocate the people's saving in the different area. For example, in case of mutual fund, suppose as an investor, we don't have any idea about how to invest my money in the stock market. So in that case, mutual fund enables us, they provide us the different types of information, whether to invest their money in the mutual fund, whether how much risk is associated with the mutual fund. Apart from that, if we invest our money in the mutual funds, that fund is also properly utilized by the mutual fund company to allocate those funds in the different area, the area from where maximum return can be available. Next is the monitor corporate performance. The efficient financial system also monitor the corporate performance of any country. Here the different types of regulatory bodies, for example SEBI, Security Exchange and Board of India, Reserve Bank of India, Ministry of Corporate Affairs, and the different accounting bodies, they also monitor the corporate performance of the country with the help of financial system. Price related information, reduction in transaction cost is also a part of the important function of the financial system. Here, reduction in transaction cost implies that with the help of efficient channel, with the help of so many technology, we can minimize the transaction cost of each and every event. Okay, that means it will enable the earning per, it will increase the earning per share of the shareholders with the help of reduction in transaction cost. So these are the main functions of the financial system. Now the next part is the structure of Indian financial system. The structure of Indian financial system is divided in two parts. The first part is the economic reforms era, and the second part is the new industrial regulation policy. Under the economic reforms era, these are the main part under the Indian financial system. That means the development corporations, finance corporations, commercial banks, cooperative banks, regional rural banks, non-banking financial companies, mutual funds, postal saving banks, Reserve Bank of India, insurance firms, provident and pension funds. These are the main part of the economic reforms era under the structural financial system. And apart from that, under the new industrial regulation policy, the main part is under this regulation policy is the Narasimhan Committee recommendations, which was published on which was established on 1991 under the financial sector reforms. Now, in 1981, Government of India appointed a committee under the chairmanship of Mr. Shri M. Narasimhan to examine all the aspects relating to the structure, organization, functions and procedure of the financial system. This committee was especially appointed by the Indian Finance Minister Dr. Manmohan Singh in 1991. The members of this committee is the Deputy Governor of RBI, Chairman of SBI, Chairman of Industrial Development Bank of India, Chairman of ICICI Bank, Shri Manu Shroff, Shri Y.H. Malegam, and Shri Nirmal Datta Chaudhary were the main members of the financial sector reforms under the Narasimhan Committee recommendations. This is the first phase of the Narasimhan Committee recommendations. Under the second phase, the Committee on Banking Sector Reforms, that is also governed by the P. Chidambaram as a Finance Minister in 1997. The main focus of the issues are like under the second phase is the banks capital adequacy ratio among the other things. Submitted its reports in 1998 to the finance minister Mr. Yashwant Sinha. The main recommendations of the Narsimham committee reports are the deregulation of the interest rates, adoption of uniform accounting policies by the different companies, imparting transparency to the bank balance sheet, setting up of special tribunals to speed up the process of recovery of loans, restructuring of banking system, permitting regional rural banks to engage in all types of banking business, giving freedom to the individual banks to recruit officers. Apart from that, there are so many other recommendations. That means the allowing of private and public sector banks in the banking sectors, insurance and mutual funds, and Indian company are allowed to raise their funds with the help of banking sector reforms. The main part of the recommendations of the Narsimham committee recommendations. Under this chapter, this is the main part of this chapter.